Hey guys, if you're a business owner, you might be paying way more in taxes than you have to. But what if I told you that there was a simpler way to keep more of your hard-earned money just by making one small change in how your business is taxed? Today, I'm breaking down exactly why switching from an LLC to an S-Corp can save you thousands of dollars in taxes. And I promise I'll explain it in a way that's super easy to understand. So, if you run a business and you want to stop overpaying the IRS, stick around.
First, let's get clear on the basics. An LLC, a limited liability company, it's a great business structure because it protects your personal assets. But by default, all of the income you make in an LLC is subject to self-employment tax. That means you'll owe 15.3% in Social Security and Medicare taxes on every single dollar of profit that you make. An S corporation, S-Corp for short, is not a type of business. It's actually a tax election that an LLC or a corporation can choose. The main reason business owners switch to an S-Corp is to save money on self-employment taxes. And here's how. With an LLC, all of your profit is subject to self-employment tax. With an S-Corp, you pay yourself a salary, which is subject to payroll taxes. But the remaining profits, called distributions, are not. And that's where the big tax savings happen. Let's break this down with numbers. Imagine your business makes $100,000 in profit for the year. If you stay taxed as an LLC, you owe 15.3% in self-employment tax on the full $100,000. That means $15,300 goes straight to the IRS before you even pay income taxes. But if you elect S-Corp taxation, here's what happens. 1, you pay yourself a reasonable salary. Let's say $50,000. That salary is subject to payroll taxes, just like a regular job. 2, the remaining $50,000 is taken as distributions, and distributions are not subject to self-employment tax. So instead of paying 15.3% tax on the full $100,000, you're paying it on your salary, that $50,000 portion. That means you just saved $7,600 in self-employment tax. And guess what? That savings happens every single year, not just once. So over 5 years, you're looking at almost $40,000 in tax savings. But wait, there's more. Electing S-Corp taxation doesn't just cut self-employment tax. It also opens the door to other tax benefits, like the 20% QBI deduction. As an S-Corp owner, you can deduct up to 20% of your business profits from your taxable income. That's a huge tax break. More tax advantage retirement contributions. With an S-Corp, you can contribute more to a solo 401k or an SEP IRA, reducing your taxable income even further. Deducting health insurance premiums. If you're self-employed, electing S-Corp status can allow you to write off your health insurance premiums and save even more. So if you're making over $50,000 per year and haven't switched to an S-Corp yet, you're leaving money on the table. All right, now let's talk about how to actually switch from an LLC to an S-Corp. It's a pretty simple process. 1, check if you qualify. The IRS has a few simple rules. Your business must be a U.S. entity. You must have 100 or fewer shareholders. You can't have partnerships or corporations as owners, and you can only issue one class of stock. Number 2, file IRS Form 2553. This is the form that tells the IRS you want to be taxed as an S-Corp. You need to file it by March 15th if you want to apply for the current tax year. 3, set up payroll. Since you now have to pay yourself a reasonable salary, you need to set up a payroll system to run paychecks and withhold taxes. 4, keep up with S-Corp rules. Make sure you're filing payroll taxes quarterly and keeping good records so you stay IRS compliant. That's it. Once you do this, your LLC will still legally be an LLC. But for tax purposes, the IRS will treat it like an S-Corp, and you'll get all those tax savings. Now, let's be real. Switching to an S-Corp isn't right for everyone. If you're making less than $50,000 per year, the payroll costs and extra admin work might not be worth it yet. But if your business is bringing in $50,000, $75,000, or $100,000 plus per year, switching to an S-Corp can save you thousands in taxes every year. If you're not sure whether this is right for you, talk to a tax strategist or drop a comment below and I'll help you figure it out. All right, guys. So here's the big takeaways. LLCs are great. but they come with a high self-employment tax. S-Corps let you pay yourself a salary and avoid extra taxes on the rest. If you're making $50,000 plus per year, this can save you thousands in taxes every single year moving forward. And the best part, it only takes a few simple steps to switch. If you found this helpful, hit that like button, subscribe for more tax savings tips, and drop a comment if you have any questions. Again, thanks for watching, and I'll see you on the next video.